Good morning, everybody. How is everybody doing on this fantastic Tuesday morning? Today is the 21st. We're going to be taking a look at some price action setups across the board. We're going to look at Bitcoin, take a look at a few FX pairs and a couple stocks. Today's going to be on the short side of the stream. Not a whole lot of stuff happening. We got a ton of data coming out this week, so markets are going to be a little bit crazy and hectic. I'll give you Bitcoin predictions and I'll answer some questions. And first thing I want to say is ouch for Tanko Belthus. Just got liquidated trying to short ETH at a 100x leverage. Damn it, man. I hope that's a joke or a meme, because you will not ever make money trading at a 100x leverage. Ever. It's impossible. You need like a 30% return just to break even on that trade, counting fees. You see what I'm saying? Like, even if you are on the right side of the trade, you literally need to get like a 30 something percent win just to break even, just to see your P&L stay the same. Not advisable, my friend. You can make decent money with just using 5 to 10x leverage in this game. That is how you are supposed to do it. I wouldn't do it with any leverage until I understand fully what I'm doing, right? And yeah, so let's go on. Let's move on. All right. So right now you can see Bitcoin's consolidating under resistance. Let me go over here to the Bitcoin chart. Oh, I got it up over there already on the daily. Let me put this back on the hourly. You can see that it is having a slight pullback. So I guess let's put ETH over there. ETH is up 4% on the day. So ETH is having a much better day than Bitcoin is, obviously, because Bitcoin's only up 1% on the day. So I can understand why someone would want to short Ethereum. No, I can't actually. That's a very bullish day. Very bullish. You're not even at any levels where you could justify a short entry. Now, if you took the entry here when price traded up to it last hour, you can see that's probably what occurred. Probably thought that it was going to hit that and roll over. See, the thing is you got to see that occur, right? You got to see that play out. You can't just assume it will. If you'd have just simply watched the 5-minute chart, you would have known not to take that short. First 5-minute push into daily res, you closed on the high of that candle. Very next 5-minute candle, strong push through. So there was no reason. Now, come over here and look at what is occurring at daily res on pound yen. You see the difference? There's a break above, close above, another open, close above, but you have clear stalling happening. And now you're breaking down, getting ready to make a fresh low. Now, this isn't an advised short either, because this asset is bullish on the daily range. There's your open. First high of day, low of day, up. That's your impulse. So the impulse, the daily move, the expansion, if you will, has already occurred. Already occurred. So, yeah, you got to see these things, right? The four main pairs that we like coming into the week are Aussie Swiss, Aussie Yen, CAD Swiss, CAD Yen. Now, we can't really take the trades yet because we have SNB, which is a Swiss National Bank, on Thursday. They're going to do an interest rate decision. So any trade that you take now or before that day is likely going to be stopped out. Right? So, but here's what we're looking at. Yesterday, I did attempt, or was telling people to watch it to see if we got failure there. Clearly, we did not. Time will tell if this move up is a trap or not. But ultimately, I think it is. Ultimately, I think you're going to see it sell off. But here is where we would much rather take a short position up there, 68243. So this is a breakout for now. Today's Tuesday. You're having a pullback on the day. You're testing the heath level, the supply or the demand zone that was left behind in the dust from yesterday's breakout. So you could find support here and get expansion or close, up in here somewhere today. Tomorrow would be Wednesday. Give you a test of this. Thursday, you get the news. You spike up. Take out the weekly high. Maybe a few other things. Then see the reversal. That's the setup. That's what we would want to see occur. Right? You got to let price show you the way, my friends. It will. You just got to wait. You got to be patient. If you think you're being patient enough, you are not. Bitcoin trading currently above daily resistance. So the gap has been filled officially. Where is my gap chart? There we go. Gap chart. All right, so here is BTC1. That is the futures chart. That is the chart where everybody looks for the gaps and looks for them to be filled. Currently on the CMEs, there are 4 unfilled gaps. We only count 3 here on this YouTube channel because we don't think you're ever going to see this $115 wide gap down there from 9735 to 9850 get filled, as we don't believe price will ever get back down there. Because if you look at Bitcoin's entire history on the BLX index, you'll notice that it's never, ever, 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 ever revisited a bear market low. And since it hasn't ever, 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 ever revisited a bear market low, that means once your bull market or once your bear market low is situated, price just doesn't go back. And we think this is the bear market low. It's as simple as that. So you got a lot of momentum going on through the banking stuff that we got going on here. Let me see if I can. Yeah, I got a lot of strength with the banking stuff happening right now. So not quite sure why Bitcoin would be getting strength through something like that, as it has typically been correlated with the risk markets. And the risk markets were down last week strong, whereas Bitcoin was up last week. And I mean strong. It is one of the strongest weekly candles we have seen in a very, very long time, thus creating a brand spanking new gap right there. So, what are the future possibilities for Bitcoin? Well, there are several, and we don't pretend to know like what price is going to do because we don't ever. We take trades here based on probabilities and statistics. That is what makes us successful. We don't. We're not predictors of direction. It is impossible to predict direction. We make trades based off of solid price action analysis. That's what separates us from the rest. But what you can see going on here is a clear bout of unparalleled strength, opening in the gap and filling it all in one fell swoop so far this week. I mean, there's the low end of the gap. You can see that you clearly closed it, and you clearly hit it from the upside. So many people are going to short this bad boy now because they're going to be like, okay, now that gap's filled, it's going to come down here and it's going to fill this gap, right? That's what most people are thinking, probably along those lines. When, if you look at the size of that candle, what I would even be willing to say is I would not be surprised for the next 3 to 4 weeks, depending on whatever made this thing so strong in the first place, to see it get all the way up here and fill this gap before coming back down here to fill this gap. All right? Because the market tries to hurt the many. And since all of your shorts have been squeezed, I mean, all your shorts are squeezed. If they was not squeezed on this week, you had these 3 bearish weeks right there. They were definitely squeezed out then. I almost guarantee it. So there's still quite a bit of push, a vertical push we could see happen just off of the amount of sheer liquidity that was, smoked on that move up right there. You could clearly see this thing go another, hit 35 grand. I mean, you're just, 28 trading at 28,265. That's a $10,000 move we've witnessed in a few short weeks. What's another 5 grand? Right? What's another 5 grand? So please be careful if you're trading this volatility. Please make sure that you are not using insane amounts of risk. For anybody that is new to the channel, welcome. My name is Heath, and this is the official Trade Talk channel, where I analyze price and try to show you where the highest successful or the highest probable entries are to help you become a better trader. I screwed up my own intro, but it's all good because I'm kind of in a hurry this morning. All right, so you can see this number up here, 3560. That is simply going to be of monthly support. Now, the reason this is important is that's also where the gap is, right? On the CME, you got the gap there, starts at 35K. But it's a monthly support level that was busted and never retested. You broke through it here, and you broke through it with an amazing amount of force. So a retest of this level has always been potential, right? Always. I can remember saying, even back over in here, that, a pullback all the way up there, that would potentially be a good spot to get bearish again if it ever does get up there and fills that gap, because you still have that lower gap or the new gap that was opened down here. And what we're looking for the majority of 2023 is a sideways market, based on the candlestick structure, right? We are looking for a sideways market. That sideways market range would be $46,205 all the way down to the yearly open, which is 16,490 for some reason on the 12-month chart. There it goes. That's right there. 16,531 is and should be the real price. There we go. We got it. So 16,531, that is your yearly opening range. So you potentially could see prices trade as high as 46K and then back down again, right? All the way back down to 16,000, because that's what price does. It did it here, right? You had an expanding year candle there, boom. Then for this entire year here, you had a pullback candle. The very next year, it took a whole year. You had your open at support. You retested resistance. Then you pulled back. And this was your fresh yearly open. And then you pushed down back to support. And then that's when you got the expanding candle. So potentially, and more or less, your 2023 range high could be 45K. Now, I'm not saying that I am expecting it to get there, guys. All right, please understand that. I'm just pointing out the potential range for this year. This entire candle is your potential range for 2023. That's why we bought 16,540. We didn't get the very low tick on the year because I got long on 3 different accounts on the day, January the 1st. So by the time I got all 3 accounts situated long, I didn't get a perfect 16,531 entry on none of them. The entries were like 16,540, 16,555, and then 16,557 or something like that. So I'm still currently holding one of those accounts long in leverage, with leverage on, because that's how I trade. But that position is in great shape, obviously. So made a lot of money on that trade. It's a fantastic trade. But I can literally see prices getting as high as 46 grand, pulling back, with that gap being at monthly support, 35K, seeing this gigantic monthly bullish outside candle also known as an engulfing after such a massive bullish trending candle here. That is a continuation pattern. So we could see next month, even maybe 2 months, 3 months from now, but we could definitely see 35.60. What you would then have if that were to occur is all of your crypto Twitter guys out there and YouTube guys out there that have been following us, right? That because they're constantly wrong, acting like they're always right when they're always wrong. They're going to have you be long and strong once that gap gets filled. That's going to look very bullish, very bullish. That Bitcoin's all the way back up to 35K. You will see predictions of 60 and new all-time highs 2023. I promise you, you will see it. You will see those predictions, but the probabilities suggest a 46 to 11 being 2023's high. Okay? It's not me, it's just the probabilities. That is your range set in by the marketplace, not by me. I didn't dictate these prices, the market did. I just know how to read the chart. So keep that in mind. I don't believe you missed anything. I think you have until the halving before you can even worry about starting to get bullish for your longer term hodl, or if you think the 4-year market cycle is still playing out, as there is no reason to assume that it is no longer valid, as the evidence is actually that it is still very much in play, still very much alive. And the fact that it has done exactly the same thing every single market cycle, almost down to the amount of candlesticks in the 4-year periods. Like, it's insanely crazy of how accurate it has been. But, other people see it differently than I do, of course, and that's okay, as that is what makes the marketplace the marketplace. But I am looking for a retest of monthly support at the very least. So, and since that gap is up there, I see no reason with this amount of bullish momentum that it has of squeezing these shorts that we're assuming that this was a bear market pullback because they don't understand the simple fundamentals of how prices work, of how markets work. They're looking at this. They're looking into the past, and they're letting the past guide their future investment decisions. And they're looking at stuff that does not work, right? Fairy tale stuff like fractals and all that nonsense. By now, you guys have seen the light because you're still here, right? I got many long-term followers that are still around because I consistently nail these beautiful, awesome setups, and they like the fact that they're learning actual market intelligence. And market mechanics. The market sets the range, always. The market sets the range. And that's your yearly range, 16,531 to 46,211. Now that I've said it, you'll see it on Twitter somewhere. Somebody else will say the same thing because they'll run with it, and I'm okay with it. Just be careful looking for shorts just because you filled this gap. Gaps do not have to fill. There are gaps in the stock market. First and foremost, comparing Bitcoin to the stock market is apples and oranges. It's two completely different things. You have two completely different assets. It's like comparing Forex to stocks, right? You're comparing currencies to stocks. It's not the same thing. It's not the same thing comparing Bitcoin to a stock. But I'm saying this to say that, or saying that to say this. There are gaps in the stock market that will never be filled, like on stocks such as Apple, Amazon, and many others that will never, ever, ever be filled. The more people you have, the more money creation you get. That is why on your stronger companies, your good companies, and on your indices, the chart goes from the bottom left to the top right. It's because of the civilization growth. It's the growth of humanity. More people makes more stuff, more money is created, more, higher, higher prices will go. It's just that easy. So there are gaps that will never be filled in companies like Apple, Tesla, Amazon. So the gaps on the CME chart, there's no written rule somewhere in some red book that says that the algorithms that control price movements or price fluctuations have to go back and fill gaps. They don't. They don't. So that's why I'm saying there's potential that that $9,000 gap will never be filled because, like I said, if this ends up becoming the bear market low, if that's a big if, obviously, then you're not going to see that 9K gap get filled because Bitcoin has never, ever broken a bear market low ever before. And I don't see why it would now. It's doing what it was built and designed to do. As Bitcoin matures as a financial asset in the financial world, the price chart should continue to do the same thing. You have your you have your boom cycles, you have your bust cycles. You can see it on the S&P 500 charts. You can see it on basically any indices. That's the way the markets are. Here's the S&P 500. You can go back as far as you want to go, man. As far as you want to go. Like, it trends up and to the right. That's what Bitcoin has been doing as well. So we set bear market lows now. You can break bear market lows in the S&P 500 because we see that here. This was a bear market low. 2001 bear market. But there's an argument to be made that this was just a gigantic range and was not trending, if you will. So this could be looked at as a consolidation period. This actually be the bear market low. But all that stuff really doesn't matter. What matters is what's in front of us. What can we do right now? That's all fun and stuff to look back in history and pull up stuff like that. But what can you do for me today, Mr. Trade Talk? Where are we making money today? Well, currently the only trade setup that I am looking at is pound yen potential short. That's it. There's nothing else across any other asset class that I see that I like. Obviously, the stock market is open now, but I'm not planning on doing much because we got FOMC tomorrow. And I do believe you're going to get a 25 basis point rate hike, as that's what the market is pricing in. And I do believe that you're probably going to see higher prices today on most of the markets across the board. And you'll potentially get a sell off tomorrow because Powell's going to come out and say stuff like we're not bailing out the banks. It's not a stimulus package. We are not doing this. We're not going back. This is not going to be like '08, blah, 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 blah. And the market's not going to like it. So you're probably going to see a pullback. But ultimately, since any market that's trading above its yearly opening range currently, I would expect to have follow through to the upside. Any market that's trading under its yearly opening range, potential to see that pullback be sold into, right? Just like you got right there. So you broke down, traded back. That was a selling opportunity. So bots and algos are definitely going to be looking to sell this, A, because it is trending lower on the year, B, because you are under your yearly opening range, and C, the 21 exponential moving average is right there. So this is probably going to be a selling opportunity, at least for the next week or so, right, on the Dow. Now, ultimately, I do expect the Dow to get back above 333.36. When? I don't know, but ultimately I do. So eventually it is going to find a low. I do not believe it's going to make a new bear market low. It's just the range that is in play currently, right? Currently, your range is this. There's your first quarter or fourth quarter, sorry, but that's your range that's in play. So we'll see what happens. I think you'll find support roughly around 36, 76, $30,000, 76, $30,676, as that is demand. And then that'll probably be a buying opportunity. S&P 500, you're still trading above yearly opening range. Looks fantastic. You did get a retest of it here, and you're back above it. There is your weeks, right? So this week looked terribly bad. We'll have to see how this week closes. A close under the 21 means that we'll be looking for a retest, potentially, of the yearly opening range. Okay? That is old support. You are simply retesting old support. And you tested it last week and it failed. So naturally, a close above 39.69 would be what? Bullish, correct. Correct. And you would be looking for pullback long entries moving on into next week. But for this week, you're at the top of the weekly range. So you could potentially see the top be put in today or tomorrow once you get the press or the news announcement, the FOMC. We will try to stream that live. So if everything works out technologically, we will be live tomorrow during the press conference, and we will look for trade entries. I just think that if you're trying to find an entry today, you're just, it's going to be difficult for you. Very difficult because of that. Because you've got the news tomorrow. You also have a bit of news coming up here in a minute. Fed Chair Yellen speaks, and you have existing home sales. Either of which, shit, I clicked on the absolute wrong thing. Either of which can cause market volatility. Volatility is your friend if you're a trader. But here are the actual numbers right there. And for anybody that doesn't know and wants to know, a higher than expected reading should be taken as positive or bullish for the USD. So anything above 4.19 M, like 4.2, for instance, would be supposed to be bullish for the dollar. But as everybody knows that follows me, you have the news and then you have the market's reaction to the news. Sometimes it doesn't do what it's supposed to do, because sometimes it's just a liquidity grab. It's just out there to hurt as many people as it possibly can. So be very, very careful. And you got a lot of crazy stuff going on with options lately. Few things happening there to be aware of. There are some stocks that are showing backwardation. There's just, I mean, there's a lot of stuff out there that can cause a lot of crazy volatility. So be aware of that volatility. Just keep your wits about you. Approach this the right way. Make sure you're using sound risk mitigation, and make sure you're waiting for high probable areas to look for those trade entries. Right now, you are trading as an inside day on Bitcoin. That means you are trading inside of yesterday's range, high to low. You are not at a high probable area at all. You're actually in the middle of the whole entire daily range. You're above any kind of intraday resistance or supports. I guess one could argue that there's an hourly Heath level there, but I mean, you're always going to be able to find stuff like that. Does it have any relevance? Right? Is it important? I would strongly say no to, right? Like, yeah, it was tested once and failed here. But you're back at it again. So would I attempt to short that again? I don't know. I think the shorts backs are against the wall. If we look at the accumulation metric over here on Glassnode, you can see that you are starting to see people accumulate Bitcoin. So people are starting to leave their bear britches at home. They're starting the bullish people are starting to come out in droves again. I mean, that's a 0.82 on the trend score. That's a high number, man. It's a high number. If you look at your short liquidations, I don't think this thing has peaked out yet. Yeah, it did peak out. There you go. Peaked out at 72 mil. My goodness. That's a lot of shorts that got smoked. Boom. And then on this pump here, you got another short spike, but notice how the short spike is smaller. That's because the majority of the shorts were already liquidated. You did get it a little bit more, so eventually the market will look to rotate and go back after the longs. Okay? Because that's what markets do. Markets chop people apart. and don't know what they're doing. All right. Not us, though. Not us. We're ahead of the game. What else? There is something else that I wanted to show you. Put to call ratio. Lot of puts being bought on the move higher. Obviously, sharp drop off indicates what? Forced liquidations on those positions. As when you're buying premium, you want the mark. That means you're taking a directional bias position. So if you're buying puts, that means you need the market to go down or those puts will expire worthless. So a lot of people closing positions. So boom, down you go. And what else? Oh yeah, estimated leverage. Massive drawback on the leverage ratio. The reason this is important is because that tells us that the most levered up people were the shorts. Why? Because price went up and you got a massive drop on your leverage ratio. So that tells us that the most of the open interest inside the market were shorts. There you go. So now you're starting to see a build back up on the leverage instruments, futures open interest, as price pushes up and up and up. That's not good. So we're looking for a pullback. Ultimately, when and where is going to be difficult for us to call. This is daily resistance. I have it marked on a chart for anybody that wants to attempt to take a short. This is the price that I would look to do it at. However, I don't know if I would do it today. Maybe wait for price to break down, then come back in for a retest of it, and then see failure at it, then maybe throw a little bit of risk out there, a feeler position, if you will, to see if that wants to act as resistance. But as of right now, it's not. As of right now, it has more potential of actually being support than anything. So be careful looking to short the market today. Here is your volatility metric. Similar to the Bollinger Band, and you see got massively overbought. There's probably divergence all over the place. There's no point in looking at that. Here, let me take this off, put on the daily Bollinger Band so you can see that you are currently trading at or around the top upper edge of the Bollinger Band, which is a bullish signal, guys. When you're trading at the top of the Bollinger Band, that doesn't mean you want to look too short it. It means the market is bullish. It means you're looking to buy pullbacks, not short resistances. We short resistances in a downtrend. In an uptrend, we buy pullbacks. That's how you trend trade. Like if you want to be a trend trader, those are the core fundamentals right there. You trade with the trend. The trend in this case is clearly bullish. There's no other argument that can be made. We have factual, logical evidence on our side. So if we were to go into the courts of Bitcoin and I was the prosecuting attorney, the bullish prosecuting attorney, going against the defense attorneys, being the bears, or being anybody calling this a downtrend still, I would win outright. As the only thing they have is the past to look at. Whereas we know that new year equals new trend. Right? Right. So you're looking to buy pullbacks. The Bollinger Bands, I wouldn't. You can see the middle part of the Bollinger Band is just a 20 simple. That's all it is. Those are good places to look for pullback too. Areas to look for potential buying opportunities. First one's going to be 28,054. This price here. 28. Wait a minute. And it's not 28,054, is it? No, it is 26,980. Although you're still buying highs, a deeper correction would be more favorable. So maybe a pullback down to old resistance, as that would get you closer to the 21. That would be better. You also have a daily support setting right here. So a pullback to these two areas is where I would be watching for those potential long entries. Not until then. Cannot buy while it's up here. You can, but the probabilities are against you. Because all you need is one bearish day, like you got yesterday, to take you completely from being in profit to drawdown. So if you learn to be a buyer, at supports, you do better off, right? So there it is. You have old weekly res setting close to there as well. So this is probably the area that I would prefer looking to be a potential buyer. So the trade is not a short down to 24,377. The trade would be to wait and be a buyer at 24,377. Comprende? All right, let me answer a few questions and then I gotta go. Good mornings. Man, I hope that is not true. Gosh, I hope that's not true because that's not how we do things, man. Let's go, few ledges, correct? You are all future legends in my book. Good morning. What is up? Jay Bradley is in the house. Good mornings. Yellen talks in 30 minutes. Yeah, it's going to cause some volatility more than less. As far as the dailies go, you liquidated yesterday, liquidated the previous day's high. So there really is no need for Bitcoin to go up and liquidate yesterday's high. You already got a liquidation. You see that? So, I mean, if you're going to short it, try to do it as close to that as possible. I don't know what else to say. The risk to reward is terrible because of how far away the top of the market is or your range. Your high of day is all the way up there. So, like, you would need price to get all the way down to there just for like a 2-to-1. It's not the best risk to reward. As today's range could be an inside day. And if it is, that means you're not even going to see a new daily low. There is potential for that. There is a potential for that. Because tomorrow is what everybody's waiting on. Tomorrow is the day, guys. Tomorrow is the day. As of right now, there is an 83.4% chance that the Fed is going to raise the interest rates by 25 basis points. That's what everybody's waiting on. So you may get a very small range day, very choppy, hard to trade, no good for nothing, no trend. And then again, you might get, who knows, one big bearish candle that makes you the richest person in the world. I don't know what the market's going to do. Nobody does. That's the only level, though, that would even be playable, in my opinion. Thought on short CAD yen at daily res and yearly open. Yeah, CAD yen's definitely on our watch right now. We are looking for shorts, but you can clearly see that you are pulling back into this again today. So I was looking for a bigger pullback. Because last week you had that expansion lower, and you've already taken out last week's low. So as far as bearish targets goes, you've already hit it this week, and you're pulling back off of it. So the new bearish target would be this week's low that was just made. So, I mean, yeah, it is a level that I would strongly advise watching. And yen, as far as I know, doesn't have anything coming up this week. Nothing major. Make sure there's nothing major for the Japanese yen this week. Yeah, I see nothing. So yeah, you could potentially take that short trade. You're bullish on the day, so you got that going against you, but you have created you have created resistance there. So, and you did get a liquidation above a swing high. So any pullback to the yearly opening range could potentially be a good spot for entry on CAD yen. I don't like this here. That's a lot of bullish strength. But at the same time, the setup is there for sure. Yeah, you'd be risking today's high, which is there. How many pips is that? I don't know that you're going to get a retest of it. It's 18 pips. So that would constitute an entry. 96,758 would be the short. Take profit would be there. So something like that, right? Then you would take profits, maybe stop to break even, and then let that trend ride. I like CAD Swiss better just simply because I believe there's more meat on the bone. But if you look at this weekly chart, there's still clearly tons of room for this thing to run to. In fact, if you get under this weekly support right there, the next area of concern, I mean, you could see a stretch all the way down to 92,444, right? Because that's the next area of potential. That's the area. That's what I'd be looking for. You break down through this, then you would see price expand down to the next area of what used to be resistance to test to see if it wants to act as support. But yeah, there's your 21 exponential. Let me turn them damn Bollinger Bands off because I only care about that on the daily. So yeah, that would have been a beautiful setup there. But it wasn't on a radar back then 3 weeks ago. We've been short the USDJ. I've been short the USDJPY since the very top. I'm still looking for that play to continue. Everybody, yep. I shorted the very top tick, almost, and I'm just gonna sit in that position as it's doing exactly what I wanted it to do. It's pulling back, which is beautiful. It's currently bouncing off the 2023 Open, which is fine. As long as we're closing weekly candles under the 21, I would be extremely still happy with that bearish position. Remember, I'm looking for a major, major move. It is a long-term trade, but I believe that you're going to see something like this play out ultimately on the yen versus the dollar. I know that is not consensus, and it is, most people believe that is not going to happen, but that's what I believe is going to happen. And I am positioned for that. Here is the actual entry for those that don't believe me. Right there, short. Boom. It has not moved. 151,796 is when I took the entry, and I will continue to hold this trade. When it got up into here, I was like, should I close it? Should I close it? Should I close it? But I know to wait, because these trap setups can take a few weeks. This is a weekly chart. There's your first weekly close above, second close above, and then there's the drop. And then ultimately, this is the confirmation as of now that more than likely any pullback into the 134 area will be met with heavy sell side pressure. All right. Because ultimately, we are looking for the dollar to keep on rolling, rolling, rolling to the downside, baby. To the downside, not to the upside. Why? Well, we got a new trend. Actually, you've got a sideways market here. This is not a trend, right? There's your 2023 low. There's your 2023 high. Your mid-range. You're not trending. You need to get above 105, 883, or below 100, 820 in order to constitute trend. As of right now, you're trading inside of the range. But that's a good spot to look for selling entries. If you get above that, don't keep trying to short it. Wait for resistance. Right there would be a good spot to look for short entries. So if you take a short entry here and it fails, the next area would be there. You could even potentially wait another week to make sure that you don't do like a weekly liquidation run, but not many people have enough patience to do stuff like that. Most people will eat 14 losses on this one setup before the play actually even happens. You just got to learn to be patient. Let price show you what's going on. But if I pull up the CAD Swissy, you can see that it's already had a pretty big move lower. Right? already had a pretty big move lower. So we're waiting for the SNB, that's the Swiss National Bank. They are doing the same thing that the FOMC is doing tomorrow on Thursday. So what I'm looking for is a push up to there, even a little higher. It could even push up into there. But ultimately, I would like for price to get closer to this if possible before taking the short entry. But those are the best ones on the table that I see right now. I did have a short order there because there's daily res. I just did not get filled. The daily resistance is here. So I have a lot of confluence at 161, 953. The daily 21, daily res, and the weekly 21. That's why I was looking for the short entry. I did get a retest of it, but it would not have filled me because look at that spread. Price would have had to got above that white line by 6 pips in order to fill that trade. Or at least 3 pips above it. And maybe they would have gave me the fill on the midpoint. I don't know. But either way, I think I missed the boat on this one. This is another good one to watch. But the reason I like CAD and Aussie, oil, if it continues its descent, that will help the Canadian loonie continue to trade lower. Weak loonie versus strong yen. And then Aussie is simply a risk on currency. So Aussie is where people look to invest their money when the markets are bullish. Like when the risk markets are bullish, S&P 500, NASDAQ, all the markets, when they're bullish, typically people will like to buy Aussie. When markets are bearish or when there's a risk off environment, typically people like to sell the Aussie. Those are the two fundamental reasons why I am watching Aussie and Canadian to short. The reason I'm using yen and the franc to do it is because the yen and the franc are risk off assets, meaning they get stronger in a risk off environment. So I believe your two best trades in Forex right now, or four best, are one of those four assets. Aussie yen, CAD yen, Aussie Swiss, CAD Swiss. Simple. It's as simple as that. But you could also get about a pound weakness with the dollar weakening. I don't think, the pound will be as weak as Aussie, but who knows, right? I'm wrong. I've been wrong before. I could be wrong now. All four of those things could end up go the exact opposite of what I think. Because I actually thought oil would be bullish in 2023. Because with the China reopening, I figured that would bring in a lot more demand for oil. And we are not seeing that. We are seeing the exact opposite. So, yeah. Ethereum, yeah, we looked at it briefly. It was up 4%. You're starting to see a pullback now, but I mean, it's an outside bullish day. You took out yesterday's low, you took out yesterday's high. If it can close bullish, That's a nice strong signal. It has been lagging Bitcoin though. Bitcoin has been the leader, guys. Bitcoin has been the leader. It's a daily chart. You can clearly see that Bitcoin is beating up on Ethereum right now. Not today, but has been. Bitcoin has been the trade for 2021. And we were all over it. Follow me on Twitter. I posted the day before I went long on this asset and said I was going long on this asset and why I was going long on that asset. Find me on Twitter. Links are in the description. Debbie top over 2% today affecting cat shorts. Yes. All right. I appreciate you sharing. Yep. You are welcome. It is my pleasure. We can look at CAD yen, please. Yeah, we kind of did. We kind of did. Yeah, I mean it's in the yearly open. It's just it's kind of far away from that daily 21 and the weekly 21. So there is potential that you know what I mean? You tighten this up. You don't typically want to look for shorts or longs even when you're far away from your trending indicators. I mean, you can obviously, like, you can still get expansion while this thing is far away from price. Just look at all these weeks, how far away you were from it. It's just eventually it is going to pull back to it. And we got that there. So you're kind of already getting the expansion, but it's a fantastic place to look for short entries. I mean, you got a Heath level right there. You got the yearly open right there. I mean, you can clearly see that it's fumbling around here. So maybe this thing hopefully, Michelle, this thing closes out bullish today. And then tomorrow, I know you're up during the London session. You can look for that London high to be set. Look for London to set the high or low. High in this case. If we're looking for shorts, we would want the London to set the high. It did that on CAD Swiss. So like literally all you had to do is wait until the 3 a.m. candle open, wait for it to push, wait for it to get back under there. That's your risk. You're betting that the London session has called the high of day after a run above the previous day's high even. Like it's just such an easy setup for a price action analyst to take. We know that the London session sets the high or low of day like 68% of the time. You could have just waited till 3 a.m. my time. I don't know what time that is for you, but should be like 9:30 or 9 o'clock. That's your resistance. So let price push up. Once you get under the close of that candle, you just bang it with the short position. Throw your stop above that, expecting it to be the high. Had you done that, boom, here you are. I mean, straight down ever since. Straight down. So, You Londoners, I'm jealous sometimes because we see this happen so many times. Look at this, 2 o'clock in the morning, boom, low of day. So jealous. It is still, I mean, like I said, it's not as easy to do in real time as it is to look back in hindsight and say that. But there are things like you know what to do, right? You're in Discord, you know what we're looking for. We look for candle closures and then we watch price around them. So around that time, look at that. There's the close. So you opened, had a push up, and that's your entry right there. Stop above that wick because that's the 2 a.m. close. 3 a.m. open. That's your London session open. It's hours. Look at your hourly candles. The 5-minute did put a beautiful heath level there or an area of supply, but you did not get a retest of it. So you would have missed that. You would have just had to wait for this candle and taken it there. And you would have been good in hindsight. WTI just bounced from daily res. I want to cut in, goes up from here. I don't know. And good morning, Brandon. Bitcoin has been kicking ETH. Yeah, it's been tearing it up. 7 a.m. for me. So that would have been 7 a.m. for you. Yeah, it'd have been a beautiful entry. Absolutely gorgeous. Flawless victory. Flawless victory. Beautiful stuff. Beautiful, beautiful stuff. And I mean, it's going to give us another opportunity. It looks like it's already been beat down, like you know what I mean? Pretty bad. So there's actually, we should probably put more weight on the Aussie yen trade because there's more room to go before you get to like that significant support zone. But nonetheless, we'll see. We'll see what happens. It's already moving lower. All right. I'm going to wrap it up, guys. You guys have a fantastic rest of your day. We will try to go live tomorrow during FOMC. That means we will be trying to go live around 2 p.m. Eastern for the minutes. And then the actual press conference itself will happen at 2:30. So we'll try to be live for that. You guys have a fantastic rest of your day. Make sure you guys trade safe, make sure you trade smart, and as always, happy trading, everybody.